Bank of America's stock market outlook: zero returns over the next decade without dividends. And I'm going to share a couple of dividend stocks in the video I do after this because this is of interest to me. All right, so the bank forecasts a flat return for the market over the next 10 years unless dividends are reinvested. The simple act of reinvesting dividends could yield a total return equivalent to the S&P 500 at 6,000 in 2031, says Bank of America. And what is the S&P right now? Let's take a gander. Was it 4,500 or something like that? I don't even know. It's 4438. S&P 500 is at 4438. So basically, you're getting a 2.5% yield on the S&P 500. Actually, is it? No, it's not even 2.5. I don't. It's like what, 1.2. Anyway, so they're saying if you want to have an equivalent of 6,000 on the S&P 500, you have to buy some dividend stocks and reinvest. That's what Bank of America is saying. Look, I don't trust Bank of America, I don't trust Vanguard, I don't trust any of them, but I think this makes sense here in some regard. Investors conditioned to buy stocks and hold for the long term may be in for a decade of pain, if Bank of America proves correct. Led by equity and quant strategist somebody, the bank highlighted that its valuation model is currently forecasting a flat return over the next decade for stocks of 0%. COVID related supply chain issues have spread beyond consumer goods, and longer-term signs of global friction are easy to find, but risk premia barely reflects this 100%. To combat the potential 0% interest rates or 0% returns over the next decade, BOA says the number one thing to do is reinvest your dividends. All right, hitting let's see, but with stocks expensive on nearly every metric, double-digit gains from the benchmark may be hard to repeat. While Bank of America outlook is much bleaker than recent history, it would continue a decades-long trend of dividends driving much of the stock market return. Since 1970, 84% of the S&P 500 can be attributed to reinvested dividends. To enable dividends to be automatically reinvested, an investor can contact their broker and enable the option online. For example, every time Apple pays its quarterly dividend of 22 cents per share, an Apple investor will automatically buy a little bit of shares of Apple, 0.0015. Then Compound will do the rest. All right, so let's dive into that. I tend to agree with that, frankly, that if we're going to have a low return on the markets. In fact, let's just look real quick again. Time we had stagflation here, and I can't remember exactly where I got this from, but here's energy stocks, here's REITs. I got to get my thing out of the way there. And there is S&P 500 right there was down 16%. There it goes. S&P. Oh, why does it keep doing that, man? Anyway, S&P 500 was down 16% over that whole decade time, net of inflation. Energy stocks were up 73%, and REITs, real estate investment trusts, were up 36%. I have no clue if this is going to happen again. But what I'm just saying is the power of reinvesting dividends cannot be overlooked, man. Growth stocks don't have dividends. Value stocks do, which is why I'm heavy and always have been on value. Now, look, this is where I built my I buttered my bread, essentially. I'll never forget my professor, Dr. Howard Block, at George Mason University in the economics department. He gave me a book, or maybe it was an article. I think it was a book. But anyway, French Fama. Three-factor investing, small cap, value, dividends, essentially. That's where that was back in 94. And I've always been a dividend sucker since then, rightly or wrongly. And I've missed out on some growth. But on other times I've gained some. But just it is what it is. At the end of the day, though, dividends are always a cash cow, especially when the markets aren't doing anything. And we're never going back to a high interest rate time. So if you can get 2 to 3% on dividends, something to think about. I'm going to do another video on 3 stocks that look attractive to me from a dividend perspective right now. Now, I haven't done any research on these stocks, so just be advised. I'm not saying you buy this. Don't listen to me. You do your own research, but stay tuned. All right, thanks.